Joining me now live in our Lagos studio to discuss this and much more, I have the Chief Executive Officer of Finance with Mukta Mohammed. Good to have you on the Breakfast Show today.
Good morning, David.
We saw $5.1 billion generated in terms of portfolio investment within the first 9 months of the year, but by the second and third quarter, we saw quite a drop. Some liken it to the impact of the COVID-19 and just the instability we had in the market as well. What do you think we would have now in terms of playing pundit, your forecast for this first to second quarter of the year? We are all hinging any recovery or prospects based on vaccine rollout. How do all of these interface affect investor confidence and how we see inflows going into that sector?
I think it's still be a challenge, especially with the second wave. It's still going to be a very big challenge. Even if you look at most of the economy of the world, we're not totally shut down. But definitely getting investors into other economies, especially developing economy like our own economy, is going to be very tough. And add to that, we have our own challenges that have to do with our exchange rate, which has been very volatile. The difference between the parallel and even the import export and the official window, the difference is so large. So you won't expect, unless you want to see such things, we'll need to see a balancing in terms of the difference between the parallel market and the official
The CBN
market.
says that it's a work in progress, the unification of all of these rates.
Well, it's going to be a big challenge, even if we are seeing oil price going up. But one thing we should also remember that as oil price goes up, our output also has come down.
Yes.
So we can't be thinking of the kind of profit that we normally made before, unless we begin to look at other aspects like the diaspora remittance, which is also will be down because of the COVID-19 second wave. Also, we won't expect the kind of remittance we'll see. Like I always say, foreign portfolio investors will not impact your economy. Rather, they are in here for the short term to make the short-term gain in terms of financial gain, and they are out of here. But what we need to attract is foreign direct investment. Those are the type of investors that come here and stay here and then begin to create jobs. So for now, what we see is what they normally call the hot money.
So you're just saying that, in other words, we might likely just see a slim growth in terms of our portfolio investment and the dividend that comes through.
Definitely, we will see a slim growth in that space. But the good news is that if you look at the Nigerian stock market, you realize that the indigenous investors are beginning to take ownership of that market, and that's what we have craved for a very long time. Once that happens, then we don't have artificial prices. We don't have the panic that has to do with exchange rate volatility when you see the foreign investors trying to live into one crisis or the other. So in one hand, it's good news. In the other hand, it's not so good. But if we begin to have the remittance from Nigeria and the diaspora also that are in to stay for the long time, then when we think of attacking portfolio investors, we should be thinking of the long-term investors, those ones that will come to be the direct investors into our direct portfolio investment into our market. Then we have the portfolio investors being likely driven by Nigeria. Then we will see the type of growth you want to see in the equity market. Then you see the type of growth you want to see in your economy, because your economy is attracting foreign direct investors, and then your equity market is being directly owned also by the indigenous players.
And it's quite impressive to see that last year we saw quite a play from the local investors. But at this point in time, one of the marking elements that define how investors invest or how they play with their cash or the pattern within which they play along, we have to look at measuring return on investment at this point in time. We also have to look at managing risks as well. This is the second wave of the COVID-19. How do you think, what sort of pattern do you see investors playing, especially when we are looking at diversified investment portfolios?
If you look at Nigeria, the kind of returns that you see in the equity market was driven by investors looking for...
money market returns are very, very
that's what I'm saying.
poor.
Very, very poor. No. So most investors are going into the equity market. And if you look at that, is there anything going to change? I don't think anything is going to change. So definitely now what we're seeing is that most risky investment that Nigerians used to run away from, those are the investments that Nigerians are coming. Those were the investment also that the foreign portfolio investors were always involved in, the risky assets. So now Nigeria is beginning to see those risky assets because of the poor return that you have in the money market. So will we continue to see this type of improvement? Definitely. We will see that, because if you look at the central bank monetary policy regime, the CBN meeting that just finished just now, it's not attracting, it's rather making room more for investment. So yes, we will see a lot of performance in the equity market, whatever we're seeing now. But the only challenge that we have in the equity market is that most of those performance are going to be short time, because most of the players that are bringing in the large fund into the equity market are short time players that used to play the treasury-based space, the bond market. So we'll see they used to do that 80 to 90 days, 81 days, 90 days, 181 days. But now they will not be thinking of doing that. They will be thinking of, some of them will be thinking of just doing 30 days. So that's why you're seeing the volatility, the ups and downs, reshuffling of their portfolio. Now that we are expecting results to come from most of the quoted companies in the next 3 months, for the year 2020, we're going to see a lot of those volatility, especially from those that are coming from the treasury-based space, the money market space, the fixed income space, into the equity market. They don't have that patience to wait that long. They just want to make the return as fast as they can.
Well, over 14 to 16% thereabout, that was the rate we had for money markets. But now you have your funds there, and you barely see a couple of naira and kobo.
You barely see even 2%. You barely see 2% in some of them. So, and then you look at that with the dividend yield of some of the equities that are quoted. If some of the dividend yield, as poor as those dividend yield could be, the differential is much, because if you look at the dividend yield of about 5.8, 6.8, based on the projection even for tier 2 banks alone, then you see the kind of huge returns that can do for any local investors that used to play the treasury space who want to play that space now.
And now, wrapping up our conversation at this point in time, let's also talk about the Nigerian Stock Exchange as a group now, with the title of a group. What sort of performance do you see, and how do you think this would also affect investor sentiments for the first and second quarter of this year?
I think it's going to be great, because when you see the Nigerian Stock Exchange,
that was quite a way to end the year 2020.
So it's going to be a fantastic one, especially when we'll see them being listed like any quoted company, do play by the rule. I mean, it's going to bring in a lot of confidence, especially when it comes to corporate governance. So I think this year will be better for those that will play the equity space, whether the short or the long term. But for the long term, there's a lot of prospect, especially with the oil price. Then we are able to get that exchange rate volatility differences closer. Then you see the foreign investors will still come. And by and by, with the competition that we have with the local investors that also would have knowledge based on the market at that time, then we are going to see an upside in the market. The only reason that we will not see an upside in the market is if we still are struggling in terms of macroeconomic stability, then in terms of exchange rate volatility, then in terms of attracting investors into the market, especially if fixed income rates tend to go a little bit higher. I don't see any of those playing out at the moment.
Thank you very much for your time on the Breakfast Show today, Mufti Mohammed. It's been a pleasure speaking with you, and definitely we keep our fingers crossed for the best results so far in terms of the performance of quoted companies for the year 2020. We would like to see how the market will swing in terms of all of these results we are expecting.
Thank you very much. Always a pleasure.